it's Keaton Prong here. So today we're going to have a look at our September newsletter articles. They are all crackers. I've written one, so that's obviously going to be amazing. So let's start our way through. This is a draft of the newsletter. You'll be getting the real copy hot into your little emails tomorrow. Oh no, not tomorrow. On the 1st of September. So, Insolvency by the Stats at July 2021. This is written by myself and Marissa. So, let's get into that. If you hang around to the end of the video, I'll show you how you can sign up for these fantastic newsletters. They come straight to you, and how to get a free 30-minute consultation with us in the event you need it. Some people do. Otherwise, you're welcome to just give me a call and have a chat. Love those two. Right, Insolvency by the Numbers, New Zealand Insolvency Stats regarding July 2021. July has mirrored the insolvency appointment figures over the last couple of months. The pressures affecting our economy have also remained fairly consistent over the last few months. Countries are continuing to fluctuate in and out of COVID lockdowns. We're in one at the moment in New Zealand. It's testing. Businesses and consumers are facing ongoing shipping delays and supply shortages. Consumer demand for goods continues to exceed supply in many areas. Labour shortages remain an issue. Inflation remains higher than RBNZ's targets, and affordability of goods remains an issue. To the end of July, the outlook for growth has continued to look positive. Unemployment rates have now fallen to pre-COVID-19 rates. The construction industry and housing market continue to run hot. Consumer spending remains strong. The Reserve Bank has halted its large-scale asset purchase program. So these are all factors that are affecting our economy as we speak. At the beginning of this week, most economists predicted that the OCR would increase for the first time in 7 years. While the messaging continues to be that we should expect the OCR to increase before the end of the year, with the view of moving to an OCR of 2% by the end of 2023, subject to the impact of the latest COVID-19 lockdown. They did in fact hold it just at the level it was at. They didn't raise it, but we can expect that in the future. By the end of July, banks had already increased interest rates over the last couple of months, anticipating the August 2021 OCR increase that did not eventuate. We doubt that banks will decrease their mortgage rates before the next OCR update, given the indications that we should be expecting the OCR to rise. Data shows that 80% of residential borrowers currently have their mortgage interest rates locked in for 1 year or less, largely as a result of the historically low mortgage rates that have been on offer over the last few years. For new homeowners with a 30-year mortgage, a 2% increase in mortgage rates will increase their monthly repayments on a $500,000 loan by around $550 a month. So if you're a new homeowner with a brand new mortgage, that's going to be a hell of a shock when all you've seen is falling interest rates. If wages do not increase in line with the cost of living, many could struggle to meet these higher repayment obligations. Alright, let's get on down into some figures, going some pretty graphs. Alright, company insolvencies, liquidations, receiverships, and voluntary administrations. The number of company insolvencies in July 2021 were consistent with May and June this year, both by number and type of appointment. So we're kind of just plateauing. It's gone nice little comparable to July 2020, but there were significantly more court appointments in 2021, up around 68% of the total, down 20% compared to July 2019. The spike in solvent appointments is likely attributable to companies waiting for their financial statements to be prepared following the end of the 31st March 2021 financial year, and other companies having a 30 June and 31 July balance date. So we did see a higher number of solvent appointments in the July month. The number of liquidators being appointed by the court in insolvent liquidations increased from 37% in June 2021 to 44% in July 2021. This trend is not surprising given the number of liquidation applications that have been advertised in 2021. Oh, that's the wrong click. So we're looking here, and this is 2021. So January, February, there's coming through to March. Then see here is this kind of plateau that we're in at the moment, when numbers are kind of just sitting constant. We're not up to 2019 levels. We're above 2020, but I mean, admittedly, this drop here was that's the first lockdown. So we'll see how that's reflected in the coming months with our current lockdown. And 2018 is still rocking up there. So we're still not back to, I suppose, levels that we have seen in the past. Notable insolvency appointments for July. Receivers have been appointed over West Coast Brewery, New World Investment New Zealand in receivership. The business was listed for sale after one of its key people, a non-resident, could not get into New Zealand due to COVID-19 border restrictions. When the receivers were appointed, the business had not yet been sold. Many of the companies were subject to insolvency processes this month, operated in the following industries: construction, dairy, forestry, and hospitality. So that's kind of where we're seeing a lot of the work coming through at the moment. Of course, hospitality is always going to be busy. The latest lockdown's not going to help that. Forestry was in the news just the other day. They too are struggling to get out there and cut down the trees with huge demand. And dairy and construction. Unsurprisingly, I mean, hospitality, it's winter. This is also their slow time, so they're going to be having trouble. Personal insolvencies, bankruptcy. The number of personal insolvencies has been fairly consistent month on month since April 2021. Bankruptcies were around 24% higher in July 2021 than in the previous few months, which correlates to fewer no asset procedures and debt repayment orders in July. This shift might indicate that there has been more payment default on bigger debts. As the cost of living continues to increase and more companies fail, we expect that there will be more payment defaults and demands made on guarantors. Personal insolvencies are likely to increase as a result. So here we go all the way back to Jan 2020, and it's up, and then lockdown, and a slow climb, and then it's kind of just done that, and then January rose, so it's a bit lower in January, and it's climbed a little, and then we've kind of just plateaued, much like the corporate insolvencies have. Could be some relation there, time will tell. So, winding up applications. The IRD's enforcement activity has continued, but the numbers have eased off slightly since June 2021. It was the petitioning creditor in 67% of July's liquidation applications and continues to lead the way by advertising 67% of all creditor applications in the year to date. So you'll see companies in blue, IRD in orange, and this is just the massive disparity in just the level of work IRD is pumping out compared to just other creditor petitions, non-IRD. It's just, compared to past years, not massive, but it's still just a lot more than what they're putting through. And you can see the jump there where IRD is just ramping up their collections. What'll happen in lockdown, that'll no doubt make a different change, but we'll see what comes in the months to go. In the July to 2021, in the year to July 2021, 418 winding up proceedings have been advertised, and 255 of the named debtors, 61%, have ended up in liquidation. The IRD has advertised 161, 63% of the court applications. The table shows the number of companies that have gone into liquidation after the liquidation applications were advertised, and how many of those were advertised by the IRD. Okay, so that brings us to the end of the article. That was prepared by myself and Marissa. So, as I mentioned, if you want to have a free chat about any of the issues your business is experiencing or about any other insolvency matters, contact us on 0800 30 30 34 or email inquiry@mvp.co.nz. The other option is you can swing over to our website, and we have contact number, and we've got just messaging thing. You put in your name, your email, subject, how we can help, fill out the little form there. Can't visit us at the moment because of lockdown. Otherwise, you are welcome to give me a call directly. Where's my details? Oh people, that's me. Well, it's all of us. If it decides to load today, internet's on the go slow. Internet is on a very go slow. Here we go. So here's all your LIPs in the top line. So you've got Boris, Perry, Ian, Colin, and myself. Alright, thank you for listening. I have been Keaton Bronk. Enjoy. Hey, again, I did promise to show you how to sign up for our newsletters. So the easiest way, go to the contact us page, as you'll see there. Scroll down to the bottom, and you chuck in your email. mvp.co.nz. Chuck in the first name. Oh, they already did that. Keaton. So I'm already subscribed because that's how I roll. And then you just hit the subscribe button and you get signed up to our newsletters so you can get them hot on your desktop, start of the month in the future. Alright, enjoy.